Federal Reserve, as expected, keeping its key interest rate right where it was. That means the real focus today will be on the chairman's commentary, which has been happening. And we have our own commentary from Doug Flynn, co-founder of Flynn Capital Management, just ahead of the closing bell on Wall Street. So just real brief before we do the bell here, Doug, that we knew they wouldn't change on rates. Nobody expected them to. Does anything stand out from how Powell's been talking about it?
Yeah, I mean, the news hit the market like a feather pillow today. It really was completely as expected.
Right.
A couple of things stood out, really. It was like it's a much more upbeat speech that he gave. He said the economy is expanding at a solid pace, where last time it was a moderate pace. He talked about unemployment showing signs of stabilization, where it had edged up last time. And he also removed a warning that they had that there were risks to unemployment. That warning has been removed. So basically, the rates are staying put because the economy looks solid and the job market's okay. That's the summary of today.
Interesting. It brings, whether he's fighting inflation into the mix, which we'll talk about. Let me pause, do the bell, and we begin the hour, though, with your wallets and the Fed chair's announcement today, what it all means for your money. Jerome Powell electing to leave interest rates unchanged. He and the Federal Open Market Committee, and that move not making investors the happiest. The likely leaves the president disappointed as well, as Doug Flynn rejoins us right now. As you said, no one expected him to do anything different, but I think you were peeking into the commentary about the job market, which is interesting because we have some headlines today on jobs, which I'll get to. But he's saying the job market's stabilizing, okay? And what's he saying about inflation? Like, in other words, why is he holding rates steady right now?
Yeah, if inflation is still a little higher than they want it to be, they set that arbitrary 2% inflation rate as their target, and it's still in that 2.7-ish. And so it's kind of hovering around there. And look, 2 point anything to me is a very good inflation rate. Historically, the long-term average around 3. So you're below that. So they picked that 2% number, so they can use that as a tool to say we're not as low as they want. But what Trump wants is he wants somebody to come in replacing Powell that's going to cut rates aggressively, but still be considered credible and independent. And that's the mix that he's trying to morph us over to, because he wants rates lower, even though the data doesn't suggest that they should be lower right now.
Okay, it doesn't. So you're saying that it doesn't necessarily suggest that now. Okay, so holding steady makes sense. When I say there were headlines on the job market, I mean, I think we all woke up this morning and saw, plastered in many of the websites that Amazon was cutting more jobs. It's like 16,000 corporate employees, so up to like 30,000 job cuts or thereabouts with the 2 rounds, right? So that's the headline, huge American company cutting jobs, and then the Fed chairman says things are stabilizing. So what's going on?
Yeah, this is a good proxy for what's really going on in America, I think. It's really a sort of a combination of things where you find generative AI coming in and shrinking the corporate workforce. This is middle management that's getting squeezed here. And at the same time, while they're doing that, the profits are up. And then, you have situations like that where the labor market is sort of weak, but it's not cracking. And that's sort of the walk they're trying to do. You're in what's really considered a reallocation phase of these jobs. As evidenced by Amazon today, all of these people have the ability to try for different jobs in the areas that they're expanding. So a perfect example is they're shrinking certain jobs and they're growing other jobs within the company. So you have a chance to apply for that within, but you obviously have to have the skills for that or want to apply for it. Otherwise, they'll help you with some outplacement. But I think that's a good situation that you see is what's happening. So it's sort of like a key indicator of the way things are going overall.
No, that makes a lot of sense. Kind of explains a lot of the trends we talk about all the time. Thank you, Doug, as always. Doug Flynn. I want to go back to the